Be Wealthy and Smart, episode 1344.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the consumer confidence indicator dropped, but something else was a little bit stronger than expected, and the Fed being data-driven counterbalanced the weaker information with the stronger information, and the way the market interpreted it, interest rates rose. So first, consumer confidence hit its lowest level since mid-2022 in March, as people grew concerned over employment and inflation. And that was the other data point that the Fed got yesterday. The Labor Department said the Employment Cost Index, a measure of wages and benefits, added 1.2% in the first quarter, which was above the 1% consensus estimate from economists polled by Dow Jones. And that caused interest rates on Treasury yields to jump, with the two-year yield topping 5%. Now, the Fed makes its interest rate decision today, but already the market is saying they don't anticipate a cut, and there's a 44% chance of a cut in July, and a 77% chance of a cut in September. That's what the market's saying. The higher interest rates caused the stock market to drop as it adjusted its expectations. And with the amount that the market has gone up since October, I think with this information, it probably needs to have some sideways choppiness to figure out what's going on with interest rates this summer and whether we're going to see any interest rate cuts. The thing about consumer confidence hitting a low level since mid-2022 is that the consumer is responsible for 70% of the economy. So if the consumer is losing confidence, that means they're not going to buy the big ticket items, and it means the economy may slow down. It was revised down to 97 from 103.1 in March, and that was generally unexpected. Some of the reasons for the lower consumer confidence were elevated price levels, especially for food and gas, with politics and global conflicts as a distant runner-up. But we've also seen weakness in the job market. So if people do continue to get laid off, that's also going to affect consumer confidence. Meanwhile, the housing market has hit all-time high prices, and my next podcast will be about that. We also had I-bonds reprice, which are Treasury securities that you can invest in for 6 months, and they just repriced at 4.28%. So now they're under 5%. I think in general, the Fed isn't really anticipating how weak the economy is going to get. I think with higher prices, higher oil prices, a weaker job market, they're not really forward-looking, and we could see more weakness than is expected this summer. But nonetheless, they're still really focused on the inflation numbers, and that being above the 2% level that they want to see is what's keeping interest rates high. So it's that stickiness of a little bit higher inflation that is keeping them from lowering interest rates. Should that change, I think that would change their outlook quite a bit. But for now, we're stuck with the Fed probably not making any change until they see a more favorable inflation number. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.